Hello, this is Ronald with Indicator Vault, and in this video I'm going to go over the versatile divergence indicator. And this is a great one to have if you use oscillator indicators, such as what we have here, RSI or Stochastic, Williams %R, and there's a few others that I'll show that it offers. And it will automatically plot where there's divergence between the indicator and price. And so let me just go quickly over the settings here. Obviously notifications, the colors, and then for each of the indicators you can even alter and change the settings for each one, which is great depending on your trading method and style. And so here you get to pick under the oscillator tab which one you have, and you see quite a number of the indicators to choose from that it will pick or that you can pick, and it will plot out where there's divergence between these indicators. And all these are very popular ones, very reliable ones. And so let me hop into the chart here. And you see I've got the RSI one pulled up on a Euro Australian dollar chart, 5-minute chart. And so here's what we have. As you can clearly see here, it plots this one, this bullish divergence. Price made a lower low, whereas the RSI indicator made a higher high. And typically traders want to use this to show where there is going to be a price reversal or continuation, where either price is weak or strong. And so it's giving hints and clues as to where price may want to go to next. So one thing you could use, you can use fibs to kind of tell certain retracements. If you wanted to get in here, that's fine. But as we can see, we're waiting to have price make a higher high. And so as we can see, it does here, but we can wait for a retracement. And yes, it does dip below the 61.8 and 75. But if you had an entry there of just 8 pips to do under the low, and for 25 pips. This is obviously, on the 5-minute chart, more of a scalping thing. I have another, higher high here, and you can at least go. You can also plot here with the indicators of when you might see the next divergence happen. So as we can see here, this was giving us a sign that price was doing a fake out, whereas the indicator was saying actually it's getting stronger. So it does a fake out, continues up, and what do we have here? We now have bearish divergence forming. And so this could easily be a take profit area when we see divergence forming as well. At least this would give us a clue that we should expect some type of reversal or for price to retrace to some degree. So here we have price doing another fake out. You see relative to this high on the indicator and this high to price shoots up, whereas the indicator is not shooting up. It does not have the strength to take out this high here. So what do we see price do? It plummets again, making a lower low. Now, one thing I like to do with a fib is, if you can kind of see, divergence taking place, if you can kind of get an eye for it, if you can find a consolidation range. So we'll take the most recent high to this low, the range low, and add the 27 extension. So this is the 127 extension range. Look at price, how it perfectly touches that extension. Many times you'll find when divergence is taking place, if you can find the nearest consolidation range, the 27 and the 168, I don't have it on here, it are very popular extension levels for it to take out before you see the reversal. And so in this case here, we see that take place. We find the nearest consolidation range. It pokes up, price, and kind of takes these stops, the liquidity up here, while making a higher high and a lower low. And as we can also even see here, while it plotted it out from this high, we can also see, look here, from this was still sloping downwards, and from this same price point, this was sloping upwards. And so we even have divergence between these highs as well. We can see quite a large drop, and then we can see correlation starts to take place again. So we notice this low is matched with this low, and now price has now taken out this low, where the indicator has also now taken out this low. So now we're back into proper correlation of highs and lows forming the same, until again we see this take place. Price does a fake out, takes out these lows, whereas the RSI is saying it's telling us it's a fake out. It's saying price is actually wanting to get stronger. What does it do? Creates another higher high. Now here I've got the British pound, New Zealand dollar 4-hour chart, and I want to go over another way to kind of read this and look for where divergences take place, and just sort of read price action properly in relation to the indicators. And so for this example, I've got the stochastic one pulled up. And so as we can see here, price makes a higher high, whereas the indicator does not make that higher high. It makes a lower high. So it's saying price is wanting to go bearish. And so we could, once we see that form, we could go to the smaller time frames and maybe look for some entries to catch some of this sell move. However, we can see it doesn't last quite very long. Now, one way to see that this is also kind of a fake out, or that price is not really wanting to go much lower, is now look at the indicator. Relative to this low, which would be this low here, matching with the indicator, we see the stochastic, while it does not go lower, it technically is higher. You see it is pretty much relatively equal to this low. But look how far away this low is to this low. So price, this is in a sense a type of divergence as well. When you look at, while they are both higher, while this is higher than this point and this is higher than this point, yes, but look at that, this is nowhere near being as relatively equal to this low as we see here. So the indicator is telling us that price is pretty much pushed as low as it's going to for the time being. And so we can use this type of divergence, so to speak, to even tell us when to exit trades as well. Let's say we got up in a trade here, that ran down, took out this low, and maybe we're initially expecting it to take out this low. However, the indicator's telling us it's already made its run. This is as far as it's going to go, and we can properly exit the trade and then sit on our hands and, wait for the next prime setup to form. Now, I also do want to point out you can change the settings and have this show up where it can offer trade ideas. As you can see here, stop loss and take profit is available. If you wanted to follow this divergence with here, and you can see there's two plotted here from here to here. You can see that goes up, continues to go up while this goes way down. And again, we can see it's still kind of consolidating. It might be, changing directions soon. But again, the whole point of this indicator is to mark out basically cracks in correlation with the indicators. And again, all of them are great. The zigzag, the awesome oscillator, the MACD, and you can change all the settings in each of them to match your trading style. And it's a great one to have, especially when the alerts are on your desktop and sent to your phone. You can hop in trades very soon, if setups happen and other confluences happen for your trading style. So I hope this was helpful, and until next time.